some fairly wealthy investors out there, fund managers, who are calling for $3,000 an ounce on gold at some point in the coming years. Views on that?
Depending on the pace of inflation, that's very realistic. It's 2016. In 2000, or in and around the 2000s, gold was around $300. It's around $1,100 now. It's almost tripled in value since then in a 15-year span. So could that happen again, especially given the inflationary environment we're in? Absolutely.
So here we are, looking at all these forward projections. You must have a forward projection on the price of gold, mustn't you? That's what our viewers want to hear.
Of course they do, but I've been warned that making predictions have a way to come back on you.
Yeah. Give us some scenarios of potentials for gold.
I think it's fair to say that gold will pace real returns. So I think the price of gold, as long as we have negative rates of return, real rates of return within any economy, gold will outpace that, and gold will grow more than that. I think that gold will, it has a huge amount to do with inflation and whatever that inflation number has been. Gold's done very badly in the last few years, and one of the reasons for that is because we've been in a quasi-deflationary environment. But gold still buys today largely what it bought 1,000 years ago, 5 years ago, 10 years ago. And I think that's what I can be sure of. I think its real value is, I do believe its real value is intrinsic. And it's got that value as long as people want to buy it. And as long as inflation is rising, then gold's price will rise as well. And with all of the new impetus that Trump seems to have lit into the economy, that spells long-term inflation. And to answer a question that I didn't quite finish earlier, the Federal Reserve can raise rates a little bit. They don't want huge negative rates of return in the economy. That's bad for people, that's bad for savers. At the same time, slight negative rates of return, and that's a balancing act. So trying to guess where inflation's going to be and then make sure the rates are slightly below it means that they can inflate away some of their debt. And because the unprecedented amounts of money have been printed through quantitative easing, they do need to inflate away some of that debt, or else it'll be very hard on the national account. So most economists would say at this point in time, it's within the Federal Reserve's or the Fed or the government's interests to have a certain amount of inflation and a certain amount of negative returns within the economy to rebalance over the long term, I'm talking 5, 10, 15 years, the Federal Reserve balance sheet. And as long as that is the case, gold should do well as well. And I can't see that it would take them less than 5 or 10 years at a minimum to try to slightly rebalance the Fed balance sheet, which means inflation and gold.
Let's say we had a lot of inflation come through in the next few years. Is the possibility there that gold could go to $10,000 an ounce? That's what some retail investors would love to see, I'm sure.
Gold could go to $10,000 an ounce. I don't want to say that it will. If inflation is sufficient, gold will go to $10,000 an ounce. But that would require an incredible level of inflation over the next few years to get us there anytime in the foreseeable future. And at this point in time, while I do think inflation is coming, I don't think quite that level of inflation is coming.